for our volunteer speakers, if we could call them that. So they're each going to have 5 minutes to share kind of highlights and lowlights of how they are approaching planning and budgeting for 2021. And so it's Rory Brown, Ben Wood, and John Owen Waller who are going to be doing that for us. The context of this is all about the uncertainty, basically. So as much uncertainty as can be faced for any business person at the moment is currently facing all of us. So how do you plan with all that uncertainty? There's even uncertainty about uncertainty. What do we need to be uncertain about? We don't know. And then also thinking about how there are different set of variables going into 2021 than we've had to deal with during 2020. And what does that mean? So that's kind of the context of and the need, kind of why this conversation, why now? And we've put 4 questions to the 3 case study presenters to share with us some of the key points that they feel they can share and would be useful for us to hear. That was shared actually in the Slack group. I won't go into detail on each one. But if the speakers could start, and if we could start with, I haven't agreed the order yet, but we'll do it in the order in which you agreed to get involved. So if we start with Ben, if you could just kind of point out a few points, and then we'll move on to Rory and then to John.
Yep, great. Morning, everybody. I think I know most of the people on the call, but for those that don't know me, I head up the risk and supervisory parts of Infopro Digital, so the insight group within that, which is about a £25 million business, which is predominantly subscriptions, then events and marketing services. So in terms of how we think about budgeting next year, like ordinarily we will do our management case and then we will do a worst case. This year we've actually ended up doing 3. So we've done our management case, which I'll talk about in a moment, which is very much what we know to be true today. Then we've got the worst case, which is, Brexit, delayed vaccine rollouts and all of those sorts of things. And then the third is best case and upside, in case events come back sooner than anticipated or there's a big sort of surge. I would say between the 3, the spread is actually only about 25%. I don't think it's as wide as we thought when we went into it, and that's primarily because a lot of the change that's happened on the event space has happened already. So if I talk about the management case and the events bit in particular, the way that we're thinking about it is if in 2019 we did 30 in-person events, this year we've done 1. Next year we're planning to do 4, and those 4 are all second half of the year. They're actually a mixture. There's 1 awards and 1 expo in the UK, and there is 1 congress in Asia and 1 congress in the US. And the way that we've thought about them is we've been pretty reasonable on the revenues. I think because it's very easy to sort of get addicted to the margins of digital events. So what we've done is to try and think about, well, if everything comes back, we need to be in the market and we need to be trying to do these things. But we've been not that bullish on revenues, because if they don't happen, then clearly when we save the costs from not doing them, we should still hit the margins. But if they go well, we've already got a baseline cost in there, so we could ramp up if we need to. And I think that the difficulty is I don't think anybody knows what those physical events are going to look like, and if people are going to be happy to come, if there's going to be big numbers, low numbers, what the sponsor expectations are going to be like, whether you end up doing hybrid or you do just physical on its own, whether you do hybrid and a series of sort of small networking things, and we've had a lot of discussion internally about whether when things come back people are going to be confident going to large events because there's going to be a lot happening, and if you're only going to go to 1 or 2 you want to go to the large ones, or whether they're going to be the complete opposite and sort of smaller intimate roundtable events where there's sort of less health risk, as it were. And I don't think we know the answer of what that's going to look like, but what we've all agreed on is that we think the middle tranche is where it's going to probably go away, and that these sort of smaller conferences for around 80 to 100 people from our point of view is probably not where we want to be. So that's what we've thought about on the events side. In virtual events, we've actually we went through this year and we sort of ripped up our entire existing events calendar and tried to tie ourselves to themes. So at the moment, we've put eight virtual events in for next year, all virtual weeks, of which we know what 5 of them are going to be. 5 of them are around our sort of key topic areas. And then the other 3 in the back end of next year, we just haven't committed to. I mean, there's been a couple of our events this year that have absolutely flown, that have been thematic. And it just seems sort of counterintuitive to try and pin our colours to a mast sort of second half of next year before knowing what the world's going to look like. So that's the view on events. And then if I just quickly cover the sort of investment side, we're investing in 3 main areas. Well, actually it's 4, but for my bit it's 3. And the first is data products. So we did our first launch of a data product this year. We spent sort of the first 4 to 5 months of lockdown launching something in the central banking space, which I know a few of you are already aware of. It's gone really well, and we're trying to get resource behind a sort of further 3 data products, particularly on the risk space. So that's the first thing. The second thing is e-learning. So we had a training business, an in-person training business that was really badly hit in the eye of the pandemic, as you would expect. So we went sort of 4 months without being able to run anything, but we've shifted all of that to virtual. So we've got the run rate of what the second half of the year looks like, but clearly that's gone quite well. So we're thinking, like, what's the next logical step? And that is probably e-learning to complement it. So we're working very hard on launching that at the moment and investing in it. And then the third is linked to events around commercial content. So one of the ways that I would say in a normal recession, you expect to see marketing services go off a cliff. But actually what we've seen this year is it's held up pretty well. And it's held up pretty well because quite a lot of the sponsorship packages that we sell include integrated marketing services within that. And that's actually quite a key differentiator for us compared with the pure play events businesses that we sometimes compete with. So we are investing in trying to double down that commercial content piece and use it as a way, so we're not just reliant on event sponsorships, we're able to offer different services. So I'd say those are the 3 investment bits. I'll shut up now because that's probably about 5 minutes. I actually didn't look when I started, so apologies for that. But whistle stop, and I'm sure there'll be questions afterwards, which obviously happy to take.
Yeah, well, actually, it was 5 minutes, I think, Ben, in the end.
Was it?
So well done. Thank you very much.
Thank you.
So those were very, very good points, I think, in a nutshell. So if we move to Rory now for your contribution.
Great. Again, I think I know everyone on this call, but we're about a 30 million turnover company. Operating in the agriculture space, we're about 60% subscriptions, and the largest part of that is big enterprise subscriptions sold on a SaaS type model. Our experience over the last year is it's really shown quite a lot of resilience in the business. We're about 6% down on revenue and EBITDA compared to 2019. Events only make up about 15% of our business and are dominated by one huge trade exhibition at the NEC, which happened in January. So we got it away before the lockdown, which helped because that's a £3 million plus event, and so that was fine. I think in terms of the context of our budgeting, the important determinant is that we're private equity backed. So we're less focused on the year-to-year activities and more on what we're trying to achieve for 22, 23. That is our focus. We did our last cycle of investments about 18 months ago. So you're usually working on a 3 to 5 year cycle. So all of our focus is on what the business is going to be in 22, 23. And that's the context of our budgeting rather than necessarily maximizing profitability this year. So we're in an investment phase, significant costs going into the business. Main areas that we're investing in are around product development, sales operations, so the efficiency of our sales teams, and the technology that supports that product development. So those are the 3 key areas. And when we were building our budget, we did go through some of the same scenario planning that Ben was talking about. But our feeling is we have to set a budget. We have to agree what our budget is rather than have lots of different tiers and eventualities. So we put some assumptions in the front of our budget pack that Q2 next year starts getting back to normal, but it's not till the second half of next year that trends resume that we were seeing in 2019. And those trends are both positive and negative in terms of what we're doing. We assume that we will be able to deliver a UK exhibition at the end of May at the NEC, and I hope we can, because we've already got £3 million secured against it. And I think that's just a binary thing. We will either be able to deliver that or we won't. And if we can't deliver it, we'll just skip a year, and all of our covenants are set on the basis of that, and people understand from our investor side that that is either go or no go in terms of what we do. As I said, 60% of the business is enterprise subs, and that is growing at double digits through the year. We provide pricing indices, so it actually doesn't make any difference what's happening to our end user markets. Volatility is good for us because people need more access to that information. So those are unaffected. So it makes our budgeting process easier in that extent. 25% of our revenue is marketing solutions in the broadest sense. So we have 4 main buckets there. We have traditional classified buy and sell relationships, which have actually been remarkably robust. We still do 60 grand a week of classified revenue in the weekly magazine that we produce, and that has been virtually unaffected. We have a large content studio. We run a service called Insightful, which is sort of CSR programs on behalf of big clients in the agri sector, and that has been our big growth area over the last 3 or 4 years, but has stopped basically. So that's nearly £1 million worth of revenue that has ground to a halt towards the end of this year and early next year. But much like Ben was talking about, we have a team called Perspectives that work across our premium subscription brands, tied into the events activity, that do native advertising programs, thought leadership programs across both webinars, virtual events, and the subscription products that we do. And that has grown massively because people have those budgets that previously would be allocated to events that they haven't been able to spend, but they still have a need to go out and do that work. And that side is up about 60% this year. But in a way, that's partly replacement for not being able to do physical events. I suppose a couple of other things to mention. We do, in our program, I liked Ben's thoughts around big themes and weeks for digital activity. We are doing exactly the same. So we would pick a theme like risk management in our commodity markets and shape a whole load of activities, both in terms of the subscription brands and in terms of virtual events around that. And that provides quite a good hook of evergreen content for people to associate themselves with. And the way in which we generally run our budgets is we fix one budget, but then we do quarterly reforecasts. So we do first quarter, second quarter, third quarter forecast, and we're running our business on that basis and adapting as we go through according to those trends. So but I think we're in a pretty good place. We've budgeted for a 17% growth in revenue and a 13% growth in EBITDA for next year. But as I say, that comes with pretty significant people and tech investments that are going in with a view to the business we're trying to create in 22, 23. So that's really our story. We've lost probably a year in terms of our progress, but because we have that dominance of enterprise subscriptions, we are not as affected as most people. We do have the looming Brexit issue for our UK farming activities, which are probably more in the eye of the storm than anything else, but who knows what's going to happen there. So you can't really budget it for it.
Excellent. Thank you so much, Rory. That was so insightful and a lot of positive things coming out of that, which is really helpful. Thank you. So if we ask John to share his kind of 5-minute summary, and then we'll go to questions. So the next thing we'll do after John is if everyone could like prepare their questions for all 3 speakers, and we'll start, if you could start putting your questions in the chat and raising your hand, we'll start working through those questions and things you want to share as the first kind of group contribution. But before we do that, we'll go to John. Thank you, John.
Thank you very much, Helen. Good morning, everybody. I'm John Owen Waller. I'm the founder, managing director of SCI. We are, which is Structured Credit Investor. We're a niche player in the bond market, obviously in the financial markets, and we operate really two centres. UK and the US are our big sort of revenue areas. In fact, New York and London, if we drill down to it. But Europe's important to us, so it's we're on tenterhooks at the moment to see what happens and see what barriers to trade come up next year. Going into the events piece, we did 5 in-person events in 2019. We've done 2 virtual events this year, and we've seen a hit on revenues as a consequence of all that. We've always done webinars and we've always found them really useful for sponsors, but we've learned a lot this year, which has informed our budgeting for 2021, which I'm actually finalizing now on this screen over here. But one of the big things we found is that I think the conference cycle can be compressed quite nicely. We're now budgeting for 7 virtual events next year. We expect nothing in person to happen before the second half, and I think that in effect means September, given the summer holidays. So we've got 5 events the first half of the year, and they come in sort of 8-week cycles, if you like. The one thing we learned about events this year was that people were really waiting until the last minute to register for an event. So if you were nervous enough about an event and Delegate signing up, back when we were in live, we found this in digital this year, you really are waiting to the last minute. So we're investing a lot this next year in digital revenues. We don't want to leave it to chance. We don't want to leave it to just a sort of a pure email and a few messages. We don't want to be haphazard about it. We want to be a lot more creative and a lot more definitive about what we're doing in terms of driving that absolute digital revenue piece. Free delegates, that's fine, that's great, but they're not as engaged and they don't turn up even when they've registered. They probably turn up maybe 50% of the time, I think, for free delegates. But driving the revenue piece around events is really important to us. They turn up 99% of the time. They did do in live and they did do in digital as well this year. So that's a big piece for us because our sponsors obviously leverage a lot of goodwill from that, and we want to see them returning year after year. Let's just see now. We've got a gala dinner for the first time organised probably in October next year. We haven't got the date yet, but we are going to commit to both a live conference for our keynote conference of the year, which is in October, and preceded a day or so by a gala awards dinner. Now, will that happen? We don't know. So we are being agile about that. We actually tend to partner with law firms who have big conference spaces. That helps us cut our fixed cost of a conference significantly, as you can imagine. They get the thought leadership piece out of that as well. So we can be very agile in terms of where and when we hold our events because we have that partnership model. And it works very well. People are never put off by the fact that a lawyer is hosting the event along with us, and they come along. So I guess middle of October is our I think 19th of October, I can't quite remember the date, is our kind of first stab at going back proper in live. But then again, are people going to be social distancing? So that's that big question around the revenue piece and how that looks, and therefore that comes back to the investment in the digital delegate as well. And obviously digital delegates can come in from wherever they're based around the world, which is a great part of where we are these days. So to support our subscriptions piece of SCI is by far the most important and the biggest revenue piece as well. Obviously the community, the membership element of what we're doing around that on an ongoing basis is important. And we do have webinars as well supporting that kind of membership element of the subscription base. Sponsors, we're going to be doing more of those. Sponsors are very keen on those. The nitty-gritty of the conversation piece in those webinars is incredibly important for a sponsor. So we tend to concentrate on just one element of a conversation, such as budgeting for next year, as we are today. Again, delegates tend to turn up in greater droves if they find that the investment piece is if the discussion piece, somebody's just come to my door, if the discussion piece is really on point, absolutely specific, whether it's free or it's paid, they will come into these 1 hour webinars. You can hear the dog now. Someone's knocking the door, so I do apologise. We're all isolating, by the way. My daughter tested positive last night, so a friend of mine's just dropping off the shopping. So it's all gone mad here. The dog's going flying. In terms of I talk about the subscriptions piece being really important to us. We've seen revenue. Our subscriptions revenues, I think 158% growth this year, year on year. So COVID hasn't really affected that at all. We've put a lot of investment to that. We've brought in a head of financial engineering for our subscriptions piece to drive the market data piece even more. So we're investing, relatively speaking, we're investing more in subscriptions, especially market data, versus the online events piece, because it's not as expensive to do the online piece as it is to do the market data piece, inevitably. Not to say that we're not investing in those digital delegate revenues and doing a lot of marketing around that. The training piece is really important as well. I think now that people are, that perception of COVID next year, you know, how are they going to get their training done? So we're going to be going to, back to the training market, the education pieces, and people will pay good money for those as well. So it's a nice way to get back in. It's a kind of a low cost way of getting back into the training market as well. So I think that goes hand in hand as well with our membership piece, offering the training, but obviously as a paid for element of it. So there is uncertainty, but we've learned an awful lot this year in terms of, as I say, that I think what's really important to understand is how you can compress the conference cycle into a shorter period of time, do more conferences online, concentrate on the paid delegate, as opposed to, and almost not forgetting about free delegates, because they come in with the sponsors, obviously, but you attach a value to a delegate attending a conference and they tend to come. I mean, one good example the other day is a newsletter called Flashes and Flames, which I'm sure most, if not all of you know. The guy whose name I forget, who runs that, is suddenly gone to a paid model. And I think, oh, okay, you know, I'll have a look at this now. I've never read it before. I've heard about it. I've never read it. And actually, it's very, very good. Colin Morrison, right? That's the guy's name. So suddenly, I'm attaching a greater value. I think it's £100 a year. That's all it is. But I'm attaching a greater value to that newsletter. And every Friday morning, I'm reading it. And it's actually very, very good, because my perception, because I'm now paying for it, has changed. So I think I urge people to, you know, to think about that separation between free revenue free delegates and revenue from delegates, and understand that the sponsors really, really appreciate that as well. So that's more or less my piece. I just look at my notes here. Don't think I've left anything else. Yeah. Any questions? I hope that wasn't too rambling, but any questions are welcome.
That's excellent. Thank you so much, John. I think what we'd love to do now is open it up to the floor. Actually, we've had some really good questions coming through on the chat. And it seems that overall subscriptions are less uncertain in terms of how you tackle them. And the events is where all the uncertainty lies. So I think what would be really good is to start with an events question and maybe go to the point around pay, you know, how to get delegates, the whole point around delegates paying for digital events. It would be good to get Ben's views on this, first of all. Like, how is this your strategy in Infopro Digital?
Yeah, it's a really good question, and it, you know, we used to have quite a lot of delegate revenue. We've seen that delegate revenue disappear overnight. We have not been able to replace that in a digital environment. But I noticed a question from Carolyn around training. We have seen it be replaced in training. We've had no problems whatsoever in an online training environment to get delegates to pay for places. It's just, you know, I think it's just to John's point about value. I think the perception is for training you pay, but there are so many digital events out there and so many, you know, so many things that you can attend that they're perceived to be free. I think going into next year and thinking about how we might get paid delegates back, I'm in two minds about it, to be honest. I think in terms of initial, you know, when we first get back to face-to-face, I think particularly we're in an international market, what we're going to have to ask people to do is A, commit to travel, B, you know, you've got all the health potential concerns, then you ask them to pay to come as well. I think what we will probably do is pick one or two core audiences, build everything around them, and then see if there are other audiences that are less relevant. Because again, going back to, I think one of the things that the pandemic has showed on the events model is there's a hell of a lot of wastage there. You're essentially, if you're running free to attend events, you've got hundreds of people coming through the door that you're paying a lot of money to host and entertain. I think I made the point about being addicted to sort of digital revenues, which is difficult to get out of. But I don't envisage, we haven't budgeted for conference delegates to come back straight away. I genuinely don't think that's going to happen. It might over time, but I think training's unaffected. But that's what we've seen anyway.
We know that John, thank you so much, Ben. We know that John's charging delegate fees. Is anyone else planning to charge delegate fees for their conference style events next year? I think that's one question. And then going back to what's in the chat is, what do conferences look like next year? And I don't think we've even heard the word hybrid yet, which is really surprising. But you know, what is that model? If it's not only virtual or only in person, is there a different model there? So I don't know if someone wants to contribute. Someone else wants to contribute there.
I'll happily jump in here, Helen. Just
thank you.
Something we've picked up on. We normally only run 3 live conferences a year, and not large ones either, 250, 300 people. Obviously that hasn't happened this year. We did run one virtual event. We managed to get a few people to pay, but it was a challenge. So I feel what everyone else feels about getting delegates to pay. We've taken the view as well that everyone's really even more time poor than they ever were, and trying to get people to commit for a half day or a full day conference is not easy. So we've decided to create a program of virtual micro events that will sit as part of a subscription for next year. And our hope, echoing what John was saying about perceived value in a subscription, obviously it'll add value anyway to our existing subscribers, and hopefully it will bring new subscribers to us as well. But I think that's quite an interesting way anyway for us to look at how we deal with virtual events. We did also create our own virtual trade show, which proved to be very successful. But that is only ever going to be a one-off each year. And my only, just on that, because maybe others have done that or are thinking of that, my only, the only poor decision we made on that was calling it a virtual trade show, because everyone compares it then to a live exhibition, and it ain't that. But otherwise that's been very, very good, and I suspect could probably play a part in when we get back to normal in terms of being part of the calendar for our customers.
Great, thanks, Mark. It seems like events, are dominating the chat at the moment, and a lot of people on this call would be very interested in that point, because it is very uncertain. But I think it would be nice to go to a point around subscriptions now. So I see that we've got some new subscriptions product being launched by Ben in the data space, more kind of data-led subscriptions products. Does anyone else have any kind of particular plans about changing their subscriptions products / memberships in a big way next year, or launching new subscriptions or membership products? Is that a no? Is everyone just carrying on with what they've got?
I can talk to that a little bit, because
Great,
I think it is the core of our company is about subscriptions, and it's not necessarily about products, but it's about different methods of delivery as well. So increasingly our growth is coming from data licenses, direct API links, calls into customers' workflow systems, the technology around that. So actually the product is the same, but the method of delivery is different, and the price point is materially different. So we have just signed a deal with the largest chicken farm in America for over $200,000 for a direct data feed into their enterprise planning systems. So they take feeds of our pricing information and market data to use for their budgeting. And partly that was done through catching abuse of our data in the first place. we were seeing huge amounts of password sharing around content. So we changed the whole platform and put in multi-factor authentication for individual devices, which cut quite a lot of usage. And then actually naively, the key contact in that business phoned us up and said, of course, we rekey all your information into our databases, and then it goes out to all of our company and all of our customers, which amounts to about 10,000 people. And you go, okay, that's really interesting. A, you can't do that. B, we're coming after you, but we might have a solution to fix that problem for you. And so we are hiring specialist data licensing compliance people around our data and content, and that is driving huge new revenues. But it's not necessarily, as I say, a product development. It's more about just understanding the usage patterns, the concept of derived data away from primary subscriptions. What do they do with the information we provide within their companies, and making sure we are paid for that. So a sort of compliance type role.
Great, thanks so much, Rory. I think that leads to an sorry, yeah, of course.
We are planning to take we're launching in April a new subscription service, which takes an existing product line, which is essentially a set of benchmark reports. So this is quite a big product line for us, but it's very transactional, and we're going to take that and make it into a subscription service. And I don't think that's really come out from anything to do with COVID in 2020. It's always been on our list of things we should do, but I'm sure we've all experienced the appetite in the team for getting on and being bolder seems higher. There seemed to me a period of time. There was a period of time, sort of Q2, where it was pure kind of adrenaline, wasn't it? And I'm not sure you can rely on that forever. But I do notice, particularly from I have a research team and an editorial team. There's a sort of, yeah, fuck it, let's just go for it. Kind of more of that than I've experienced before, which is great, actually.
Yeah, I think that's really interesting, Andy, because there's one business, I won't say who it is, but I've been working with for kind of like a couple of years, and it's always been marketing solutions and events driven. And, I've been banging on about subscriptions and membership, and it's fallen on completely deaf ears, but suddenly they're doing it. And they are now researching a membership, a premium membership sort of like, proposition. So I think there is an element of, in times of adversity, the previously, inconceivable gets action. So anyway,
thanks, Carolyn. I think a key point there for me is that events can run in an annual cycle. So whatever you decide to do with your events, that's kind of a 2021 plan, right? But when a membership model comes onto the table, a subscriptions model, that's a much longer term play. So that becomes kind of the 3-year plan. So the how you factor that into 2021 is key to get the right starting point. So I don't know if anyone else has got anything to share about their kind of building new membership products out of what was previously something else that is now being rolled up into a membership.
I guess the thing that we're all learning about is how you can integrate events businesses with membership businesses, and there's been a lot of examples of that. I've found it a tremendously positive process, because you're able to engage with people on a more frequent basis than you would if it was down to physical events. And we at my current business, Environment Analyst, we do have an events membership package, which we're experimenting with in 2 different areas, depending on people's sector interests. And it's leading to much deeper understanding of our customers, and that's the key win, because you're building a relationship. So I think a really good approach is to take delegate passes as being a gateway to the membership. So I'm not looking to grab more revenue. I'm just saying, well, look, if you buy a delegate pass for a virtual event, then you become a member of that network, and that seems to go down very well.
Yep.
If I could comment on that, I think that the word of the year for us in events and subscriptions businesses has been membership. I've spent the entire year trying to understand what that means, and I don't want to be trite when I say that, but I think the point about driving membership or subscriptions together with events and these membership benefits, it's drilling down to that decision-making level of the individual who's buying the subscription or who's sponsoring the decision-making process, and finding out actually what they value. Because you might think, well, we're in memberships now, so we have to have subscriptions and we have to bolt on all these events on the back of these subscriptions, because that's what a membership is defined as in broad terms. But in actual fact, it might just be the news and the market data piece that they're buying, and the events is just a pure bonus. So there's no point in investing all this money and stuff that actually are you hitting the sweet spot for your customer. So knowing your customer is even more important now that we're going, we're doing all these events online, webinars and conferences and everything else. It's a new world, but I think we have to understand what that decision-making point is for the customer and what they're buying.
Great. So I think a key point that's playing on my mind now is the piece around team and skills. So planning for next year, what does that look like? Because it sounds like people are still investing. They're still pretty, confident in their businesses are going to thrive next year in various ways. But how does that affect, the number of people you have in your team, the particular skill sets you hiring in as part of your kind of planning for next year? Has anyone got something to contribute?
Yeah, I mean, I'll add to that, and it's sort of similar to what Rory said actually. And we're thinking around the data products in particular. Is where we're investing at the moment is positions around data architecture and structuring data, making sure that what we get through the door can be purposed and put in a structure that can then be served to customers. So we've got a sort of 2 or 3 areas. One is data architecture. The other is the web development and development of digital data products that we historically haven't really been that good at. And then the third is data. It's almost like data-driven editorial. So we have a couple of products that are loosely data-driven, but trying to get the rigor and the understanding of data sets and not using them once, and making sure that you time series stamp them and you build on that, and you're thinking to John's point about end users and what they're going to do with them. That's our sort of key area at the moment. And I was going to chip in when you're talking about multi-factor authentication, Rory, because that's like one of our key questions at the moment. Is if our central banking membership model built around data is quite straightforward, because there's only 189 central banks. They are pretty, it's one in every country. It's quite easy to do. But when I think about our other products, there's, we're going to audiences that have loads of different desks across different banks, across different countries, and it's sort of how many opportunities you've got to sell that data, and making sure that you're not sort of giving the crown jewels away one place and suddenly find out that everyone else around the organisation is using it. And that's a bit of a learning journey at the moment, and it's difficult. And we've had a couple of instances like you, Rory, where people have just put their hands up and said, "Oh, we do this with it." And from a salesperson's point of view, I mean, they literally falling over themselves with joy when those come through the door. But it's sort of identifying the other ones and trying to do that. So that's where we're focusing really in terms of skills, and also actually on that data side is around the events as well. Because I think in an in-person conference world, sponsors are always very much, well, I want to go there and I want to shake people's hands and that's what I want. But in a digital world, you can't really get away from the metrics. So being able to deliver metrics and what users are doing, and I think to Julian's point around people who are part of a membership, providing all our systems are talking to each other, we can add additional insight, which is these event delegates, they listen to this session on this topic, but actually, they've also been consuming all of this content from the subscription product, which fits the same bill, and that's much more valuable to a sponsor to understand the sort of broader the broader behaviour rather than just shaking someone's hand. So I'd say data is really where we're like really focusing at the moment.
Great, thanks, Ben. Anyone else to contribute to that?
Helen, the point I was going to make, which kind of segues from what John was saying and what Ben's saying, is that I think, you know, historically our businesses have been quite siloed in that we build teams of people who are very good at delivering against one specific product line, whether that's events or training or online websites, delivery of information. And I think the world that we're moving to is much more customer-led. So if you take that kind of format agnostic approach and start with the customer challenge, then oftentimes, you know, that doesn't fit neatly with the silos that we've created. So I think one of the things that we're having to do, and I think this relates straight to the skills question that you've asked, is building teams that are actually more generalist in approach, that can turn their hand to different formats based on whatever it is that is being discussed. And I think that's really difficult. And it feels like a backward step.
It does in a way, because we've seen that in the past, you know, just from a marketing perspective, where they've separated out marketers, some to focus on events and others to focus on subs, because they're such a different kind of, you know, rhythm and skill set and all those types of things. And now a lot of the people we're talking to are putting them back together again, which will create, you know, those problems that were there before aren't going to go away. They're still going to have the same problems, and it's how do you address that. But what we're also seeing actually from a marketing perspective, speaking to organizations on their marketing strategies, is a definite, what you've just said, Robin, a move towards a customer-led and a brand-led approach. So where previously someone would come to us and say, can you help us work out how to market an event? They're now saying we need to work out what our brand is going to do for our customers, and starting with a brand, starting with the needs, starting with the problems that are being solved, and then looking at everything holistically rather than looking at it at a product by product level, which is a definite shift we've seen post, you know, as a result of COVID, and probably just the acceleration, right? We would have got here within 5 years anyway, I guess.
Yeah, I agree with you.
Sorry, I was just going to say, for us, I think it's changed the way we've thought about hiring as well, because I think when we're looking not necessarily to fill a job description, we're looking for the right person. Because I think, you know, you can teach skills that, you know, that people need to do it, but what we need is people who are, like for us, it's people who are very good at listening, asking questions, at being curious, and of not really being scared of trying something, and also thinking around problems. Now that doesn't, whether someone's got a background in marketing or sales or whatever, doesn't matter as much to me. You're still going to get people with their natural preferences. But I think when we're looking to grow, because we're quite similar to Rory, we've got a 2023 roadmap in place and we're going at it quite aggressively. And so when we're thinking about the right people that are going to help drive us to that endpoint, it's less about specific predefined skill sets and experience and more about the other stuff that these guys can bring to the table, so that we know that everybody's contributing in the right way and we're not carrying any dead weight.
Yeah, and just to add to what Alex is saying, I mean, I'm talking about with my academy hat on right now. We have a membership product for corporate communication teams, which is professional development and coaching. But I think what we're doing at the moment is we're undergoing a huge customer research project at the moment in order to kind of build on this base. You know, we've built this great training resource for people, but we know that we can build more value on top of that. And actually that's just, you know, we're doing exactly what Alex has described, just asking them, you know, those kind of root cause analysis questions about what, you know, why do you think this is important? What is it that you really need us to do for you? And being quite content agnostic about what we build around that, because, you know, we can deliver lots of different things for them, but we're not going to be, so we just do e-learning or we just do, you know, group sessions. We're going to be thinking in a very sort of broad way about what we build for them. And the skill set, as Alex said, you know, we've got somebody who is an instructional designer and got research skills doing that project for us right now. So it's quite a different departure from someone who's just going to be producing straight content.
Great, Thank you. I think what would be really good to cover now is the e-learning piece, because I feel like that's an area where it's been very much led by what the customer needs, and clearly the customers are responding well to those products and buying them and happy to pay for them. I think I'm trying to remember which of our speakers talked about e-learning. Was I think Ben in particular. What are you seeing maybe in 2021 change about e-learning? So this year we saw it just all go online, right?
Yeah.
But what do you think is going to change next year about that kind of product type and how it fits into your brands?
Yeah, and I'd make the distinction between e-learning and sort of public learning in person, if that makes sense. What happened is our public training courses or in-house training courses all went online, which is still the same product. It's just delivered via a different mechanism. But the e-learning piece that we're looking at is the self-paced, pick up anytime, go through an authentication process, and at the end of it get a certification around a topic that you've learned on or learned about. So what we've done is look at one area in particular. So we're looking at operational risk. Clearly for banks at the moment, with their staff all out the building, there are significant operational risk concerns. There's quite a lot, a flight of people going into that area of the business, and they've all got needs to be trained. So we've worked, the biggest learning for us actually is it goes to the point everyone's been making about skills gap, is that we haven't got anybody who's ever done the whole storyboarding, working through how you put together those programs. We've all taken part in those ourselves and gone through our compliance training on the learning platform that we've got internally, but we haven't necessarily had the skills. So we've actually partnered with a third party to get that off the ground. And the plan for next year is to launch those early on in the year, and then to also augment our central banking membership packages with e-learning, because again, the second place, the more natural place for that product from our product set is central banks, because clearly they're all disparate, they're spread around the world, they've got very specific training needs. We've got a successful in-person training series already, so we can augment that and potentially do things like train their graduate intake in certain areas of the bank and all of those sorts of things. So that's how we're thinking about the e-learning specific part of it. And then in terms of the in-person or public training, more of the same really. What we won't do is return to a situation where we run training courses in person with small numbers. We'll continue to do those digitally, but if we have really, really hot topics where people want to get in person and do that networking element, then when time allows, we will go back to that.
Great, thank you, Ben. Anyone else got any e-learning sharing?
Yeah, our experience at Chemical Watch was that e-learning was very hard to scale. That's the big thing we found. Like we were really successful in launching our first course, but then to get to number 7, which is where we got to, was very painful. Took a lot of resource. Outsourcing some of that work would have been a great idea. What Ben's just described, using a partner, for storyboarding and generally building up the product. Also, I think we aim too high in terms of quality. I think it's possibly not what the customer needed. But where it really, really succeeded was in its combination with enterprise membership, because it just created a product package that looks so convincing when you're in front of a procurement person. It's like, well, what's the value of this overall package? Well, you get professional development as part of it. That told a good story, but I've been immensely frustrated about how difficult it is to scale, because really we should have had 20 courses, 30 courses, but we just couldn't do it.
Great, thanks, Julian.
Just out of interest, Julian, what was it that got in the way?
I think it was that we had to, we were reliant on external specialists to do that work, and they were from a range of different consulting firms, and the process of negotiating the course content and getting them to actually do it, and then recording them you know, building up the whole package, editing it. The projects just took much longer than we expected. So, you know, if I was starting again, I would definitely look for expertise, you know, some support to say, well, here's an efficient way of managing this project. You know, we kind of stumbled into it sort of year by year, thinking this year we're going to crack it, and we never really did. But,
so Julian, were those courses only ever sold as on-demand courses, or was any element of it live with the Delegate in the room?
they were purely online courses, yeah. So you go through and, you know, complete the course, and you get a certificate at the end of it. They were pretty heavyweight, so it's quite a lot of time, you know, that the participant has to put in. Yeah. Are you doing stuff that relates to live training as well? Then is it a package?
Yeah, I mean, I think live training, but the element of evergreen content as well is quite attractive. So I was just wondering how successful that had been for you in terms of selling the on-demand version, or is there a real sort of long tail on it?
It was successful in the sense of being profitable, but it wasn't transformative. You know, it didn't add a lot to the business, apart from culturally and in terms of customer perception. You know, we were a source of knowledge and skills. You know, skills development was part of our brand, so that was worth something.
Great, thanks so much.
We've really learned that the pure on demand it hasn't worked. It didn't work for us. You can't just let people into something and let them, and you know, and hope that they do it, because guess what, they don't. Yeah. And so, like, our membership product is all based around L&D. So, and originally when Academy was envisaged, it was, okay, we're going to create this great platform and everyone's going to go in and have a great time and chat and do courses, and they really didn't. And so what the membership is now is much more of a structured learning plan that includes courses, but it also includes a lot of other stuff. And even within those courses, we're incorporating live sessions either side of it. You know, so they have an hour together, they go away for 4 weeks, they go through the course whenever they want to, and then they come back for another live session. So it just puts some urgency into it. And I think to the point that's related to events, right, you have a date in your diary and you've committed to it, so therefore you're more likely to do it from the outset. And we found that having that time and getting them to commit to that really, really helps usage. And our organic usage is low at the moment. It's something that I think with this content review that Tor mentioned, we're hoping to change by offering some more kind of accessible formats, because for us, a lot of our content is hidden away in our courses and we need to surface that. But yeah, so I think offering those, that for us, the hybrid is that's where we've learned we get the best results and where we can deliver the most valuable, that when the renewal conversation comes, it's a lot easier because they've had that contact with you as a brand, and you kind of talk to them in the context of their own organisation and you're part of their workflow, as opposed to just some course that they went on to and did for a couple of weeks.
Yeah.
Excellent. Thank you so much, Alex. Could I hand over back to Victoria, who's going to do the wrap up for us and the thank yous?
We're on time, but that was it. We could carry on, couldn't we? And if we were in a physical room, we probably would just be breaking for coffee and then we'd sit down and speak for another hour. But thank you, everyone. I think you know, we're keen to do another one of these in the new year. So I thought the conversation was excellent, and thanks for all the questions. We haven't managed to cover half the things that we've asked, but just another. Just a note about Renewed. When we are, you know, we're trying to, as I said before, we're trying to get team members to join the Slack group. It's a good opportunity for them to kind of get involved, and looking for volunteers as well to get involved in marketing and organising events, hosting events. So I'll follow up with an email to you all, but if you could maybe pass that along to people on your team who you think you benefit from getting involved in from their professional development point of view, that would be really great. So I'll post this recording on the Renewed website. There's actually loads of really good files there now. So one of the challenges we have at the moment at Renewed is there's the website, which has got the files on it, and then there's obviously the Slack group where the chat happens, which is obviously an interesting dilemma of where we, you know, do we bring those two things together? And we're kind of looking at tech that we could use next year that we don't have to pay anything for, that can help us bridge that gap. But anyway, but please encourage people to get involved. As I say, it's free. There's no joining fee. There's a lot of energy behind the group. There's a lot of great ideas, and you'll see a great plan coming out for more stuff in 2021. So anyway, thanks to Helen for hosting today and putting in the legwork. And again, thanks to Ben, Rory and John for sharing so generously about your plans for next year. And maybe if we can join, if we can get together in Q1 next year on the other side of Brexit, we'll be having a slightly different conversation. Anyway, have a great weekend, everyone. Thanks.
Thank you.
Thanks,
You too. Bye, everyone. Thank you.
Take care.
Thank you.